Hey, how's it going, guys? And welcome back to mentfx. In this video, we're going to be taking a look at the golden rule for Wyckoff and why your Wyckoff setups are not working and how you can make your Wyckoff setups a lot better. So first and foremost, the mentorship is only available on this website right here, available in the description. Please do not get scammed. I know there are a lot of people pretending to be me. This is the only place I will offer you anything. Secondly, when you do sign up, you will have access to this entire group, to all of the text channels here, including all the markups that I send out, people send out, anything of that nature, as well as, just other markups that I look at in the future, course content in the form of multi-sectional course content, live trading, webinar recordings, and everything of that nature. So that's only available here and only available on that website. So in this week, I wanted to take a look at a few of the setups that we sent out this week and how we caught them and how we did it and why understanding bias is one of the most important things in this entire market and how your Wyckoff has been pretty much wrong this entire time, or your understanding of it might have been wrong, and what you can do differently and how you can get better. So first and foremost, I want a lot of you to understand that you can be profitable using the stuff that is free on my YouTube, so you don't have to join if you don't want to. All that stuff, that is for the people that want to get that extra value, who want to get more in-depth, and who want to work side by side with me and other great traders. Now, as a lot of you in the group actually know, we've had a fantastic week, and also C Baker right here, after first month as a funded trader, is up 35% on his 100K account. So he's up about $35,000 in about 18 days, which is absolutely phenomenal. I think it's amazing. Really happy for you, man. And the point of me showing this to all of you is just to understand that if the motivation is there, if the dedication is there, you are able to do a lot in this market. And all it requires of you at this moment is understanding what you're doing and having a concrete set of rules that you are going to use to get involved. So if you divert your attention for a second to the right-hand side right here, you will remember that the three most important things, which we went over in the first, in a few videos ago, I think the last two videos, the three important things that you need to use to basically get involved are having a structural bias, understanding where you are in structure. Are you putting in higher highs, higher lows? Are you putting in lower lows, lower highs? Where are you moving from? What range are you in? That's one of the most important things, is understanding structure. Two is going to be your S and D zone. So that's the supply and demand zones. Are you heading to a supply or demand zone? This is basically your POI. Where are you looking for prices to mitigate? Which points are you looking for price to trade into before putting in potentially new structural lows? So if you're making this kind of structure and you have this, for instance, supply zone, your anticipation is that as price gets there, nothing really matters until it gets there. And then from there, you can use that to get involved in continuous bearish structure, which leads me to the third point, which is shown by this little thing right here, which is oh my God, that was terrible, which is Wyckoff, or confirmation. So your number three is confirmation. And again, confirmation can be done a variety of ways. We have people that don't even use Wyckoff, but ultimately you either have structural confirmation, right? So that's just lower structural confirmation, looking for potentially, boom, break a structure, looking to get involved in some areas here, maybe another break a structure, getting involved in areas here. Your second is supply and demand zones, looking for potential liquidations of areas, right? Liquidating lows, continuations higher, maybe S&D 2.0s. So you could be entering either here, or you could be waiting for your S&D zone 2.0 and entering off of potentially zones here to take prices to new highs, again, mitigating your risk as you go on. And again, or you can go the mentfx way and put these two important things together to form an overall confirmation system that involves overall Wyckoff, right? So you have your equal lows, liquidation of those, potential intermediary structure, the spring, the move above, breaking structure, the move back, coming in, right? Coming in lower to test, and then continuing significantly higher on your markup, which is going to be your overall entry. So the reason I bring this up today and want to talk about Wyckoff a little bit is because a lot of you are making a mistake with your Wyckoff. So as a lot of you understand, Wyckoff can occur along any and all time frames, off of 15 minute, 5 minutes, 30 minutes, weekly, monthly, even the 30 seconds, even the 5 second, even the 1 second chart. So we've traded the 1 second chart. It's fully possible. It's fully normal, as long as you understand exactly what you're looking for. And the reason I want to bring this up is because today I want to speak about a certain thing that happened at the beginning of this week right here, and how we actually took losses that still resulted in overall positive RR by the end of the week, and how we were able to translate those losses into a continuous bias that still held. So the main thing you'll notice if we go to the 1 hour chart or something of that nature is that, oops, let me get rid of that. So the first thing you'll notice as we go to the start of this week is that we had this overall structural break here. After that structural break, we had multiple areas where we could expect price to make its way back up into before giving us potential lower prices. So after this liquidation here, we anticipated price to be, on the hourly at least, shifting bearish. And as a result, we wanted to look for, like remember, we have our 3 zones. We have structure confirmed to be bearish. Now we want S&D zones, which are seen as, and again, you can see it right here, which are seen as this last up candle before the down candle, unmitigated, showing you there's a perfect area of supply here, and this area here, again, another great area of supply, and you can use a few more if you're in the mentfx mentorship, but we're not going to go over those right now. So these are the important ones. We were expecting at the beginning of the week for price to make its way up into here, and then collapse down into the demand zone seen right here. So you'll see that we actually did have that happen. It did come to liquidate it, but we're going to talk about that in 1 second. So we have the supply zone, and price makes its way up, forms the buying climax, the AR, the ST, the UT. And what's interesting is we were actually watching this on the 5 minute. So again, this is kind of important to understand in terms of different time frames. If we go to the 5 minute now, you'll see that we overall still have the same overall Wyckoff. Now, as we get lower, you can see we can see more Wyckoff, right? There's a little distribution in here, a little distribution in here, an accumulation or reaccumulation in here that came up to make this overall accumulation, which made this reaccumulation, which made pretty much that's it, and this distribution, right? So again, the second we get to a lower time frame, we are given more Wyckoff schematics that we can see in the overall market. However, the overall one still stays. And if you've seen any of my prior videos, you understand that smaller Wyckoffs form larger Wyckoffs, form even larger Wyckoffs, which play into larger structural plays, larger supply and demand zones, so on and so forth, right? So what happened at the start of this week is we had price tap into this and then break down. This breakdown had led me to believe that we had broken down structure. We had structurally broken down like so. We'll just go like this, BOS down. So as you can see, we had believed that structure had broken down lower, and we're already anticipating for a test to occur of the schematic here. So of course, if any of you remember, you have 2 types of major schematics that occur in this market. So again, if you direct your eyes to the right hand of my screen for just a second, so that's right here, then you'll notice that what you can have is 2 types of schematics. Let's say we have an area here, right? Number 1, or type 1 schematics often look like this. You have a buying climax, an AR, an ST, maybe a UT, right? A UTAD, the breakdowns, and the potential tests, the entries, all the way down. So this is what you're basically taught is a type 1 schematic that is absolutely perfect. And again, we can label this really quickly. Here's your UTAD, your UT, your ST, your buying climax, your AR. Maybe this comes lower and makes that sign of weakness in phase B, right? And after we make this low, that's your sign of weakness, comes up to make the test, comes down to make the LPS, right? And all of these are usually from areas of potential zones of supply. So it's tapping in. And again, inside of there, you have other confirmation within those areas, but we're not going to look into that right now. So this is a type 1 distribution, right? So that's what we call that. Now, the other type is where you have, you have your zone, you have that predicted, you have an area you want to sell from, and price comes in and makes your, your buying climax, your AR, your ST maybe makes a sign of weakness, your UT, right, and then makes that break of structure, making another sign of weakness, comes to test it, comes to LPS it, and then breaks down on the markdown. And you can, again, specify that with your BC, your AR, your ST, making those, remember, creating liquidity in the market, making people funnel into sells before the real sell actually takes place. Your sign of weakness in phase B often, your UT, right? So in this case, you can see that the UT functions as a UTAD, right? The sign of weakness, and it comes up to test a potential supply zone here, comes up to make an LPS at maybe a structure block or a supply zone up here, right? Or filling in some kind of imbalance in that area, and the breakdown occurs. Now, what people forget to tell you when you're looking at overall Wyckoff is they forget to explain to you that when you have this happen, these tests or these LPSs are not fully decided until the overall schematic has literally fully happened. So what I mean by that is just as easy as it is to see that there are tests and LPSs in these areas, what can very easily also happen is the following. So instead of seeing all this occur, so let's get rid of some of this stuff. Let's go back a little bit. Okay, so let's imagine this UT very quickly again, right? So again, that's your UT. This was your BC, your ST, your AR, and maybe your SO, W and B, and your overall sign of weakness. So your overall expectation is that we're going to make that test and go lower. Now, what sometimes happens, and this is something that's very crucial to your understanding of Wyckoff, is we have a move up like this, like so, right? Maybe something like that, and then you have a breakdown, right? And at that specific point, you're left wondering whether or not this is the test, which makes you believe that this new supply zone is going to function as that LPS, and you're going to start looking for sells to continue from those areas without recognizing that just because this is a test does not mean it's a guaranteed test yet. This test is only guaranteed after we have an LPS, and price really does break down. Now we know, right? But again, that's hindsight, which is why it's important to constantly consider the fact that you've either almost 100% had a test or an LPS, or are still going to make one. And what I mean by that is, let's say price does do something like this. And at the specific point, you're correct. This is the test, and we can potentially anticipate new sells from these areas. However, the second price does something of this nature. You shouldn't begin to be confused by what's actually going on here, because your overall bias, which you've already preset using the 3 rules that we used earlier, right? So always keep in mind those 3 rules. Go watch the video before, or just go back on this video a little bit, and always keep in mind these 3 main rules: structure, POI, and confirmation. You had your structure, you have your POI, and in this case, your confirmation is actually still valid as long as price never gets above pretty much this point here, right? So price can come back up, test some area in here, and then drop off. And now that drop off becomes the real test, right? So this is something that you need to understand. A test can always happen after a potential test has happened. And this is the way that Wyckoff can even trick a lot of smart money people. Now, the reason I bring this up is because I want to go over something that happened this time. We had this overall POI. Price had tapped into it, making that UT, and broke down. From that point, I expected sells from here and from here. So I actually ended up taking sells from those off of mini fractal timeframe confirmations. And upon taking those, we actually took a loss on this move up here. Now, at that point, based on whether you were a retail trader or even a smart money trader, you might have shifted your own bias to be bullish after the break of this without recognizing that you are still operating inside of the previous mitigated zone that was part of your overall structural play. So when we came to mitigate this, instead of saying, oh, we're going to be bullish and trying to funnel into buys and losing my mind, I instead waited to see what was going to happen and anticipated that this in itself was actually an overall type 1 distribution, right? So this whole thing here was actually a type 1 distribution, and that's what we were going to see. And this one didn't matter because that's not what was going on. And we were going to see this play out. Now, what's interesting is as this began to break down, we had the test, right? We had the LPS, and then we had the breakdown in price. Now, again, someone who is new or inexperienced or cannot look back on this without maybe like having a replay tool, what you'll do is you'll anticipate potentially that what you have here is actually, if this actually loads, there we go, is actually the new LPS. So people will see this, or smart money even, will see this as a new LPS, see this as a new LPS, and expect price to continue breaking lower. And when price does not do that and make something like this, they get very confused and they get frazzled and they start to look for buys potentially. But in reality, that can now become its own LPS. And as that becomes its own LPS, what happens? Price then breaks it again. And now a Wyckoff trader or even a smart money trader might begin to get extremely confused about where exactly they are in the market and what the market wants to do without recognizing, right? They're again getting trapped by all these tiny movements inside without still remembering that they also operate on different time frames. And the second you move to another time frame, you realize that you're really just breaking down, just formed this potential test right here, and we could still have an LPS that comes up to reach into the supply zones up here, right? So you might have something like this, expecting a supply zone to reach up into there, and lo and behold, we had this long-term accumulation occur right here, which again, we were able to be participants of within price. So you can see all these many entries we were able to take. Sadly, I wasn't able to enter this. Some of the people in our group were, and as you can see, price made a perfect run up into that area, forming your real LPSY, because it's a distribution, right? Thereby acting as its actual final place before tapping into this, before then further breaking down the structure to meet our lower areas, which were met perfectly. The reason I bring this up is because it's vital in understanding that Wyckoff schematics are literally able to create multiple biases at the same time. And that is why, again, I stress the ideas of confirmation as well as the ideas of risk management and managing to potential important lows. Because very similarly, this right here on its own, right? So let's get rid of all this right here. And let's delete all these. So very similarly, when we had this distribution occur, the buying climax, the AR, the ST, the UT, the sign of weakness in B, the UTAD, and potentially this breakdown with this test, what could have happened is price could have broken down from here if we had sold it at this structure block, right? So we're not going to talk about that right now. That'll be in the we'll talk about that in the mentorship. But as price breaks down here, the second price gets below these equal lows and this liquidity, price could make a gun for this demand zone, which we were expecting, and it did. So that was fantastic. But it could have just as easily reversed right here, made a new high above this liquidity, tapped into this supply zone, or even a little bit higher into this supply zone, because remember, a wick is always its own mini supply zone on a lower time frame, tapped into this one, or even came up to tap into this one and then dropped off. But the thing is, it would still not change the overall anticipation of lower price action from our already established bias, which was based on this supply zone and this break of structure earlier in the market. So hopefully this video made a lot of sense. What I basically want to hone into your minds is that Wyckoff can occur in a multitude of ways. You cannot have a picture-perfect Wyckoff distribution or accumulation occur, right? They are snowflakes, as we always call them. It is the snowflake rule. If you see price, again, direct your attention to this side right here. If you see price doing something of this nature, right? So something very random. It in itself is Wyckoff. And within here, you might have thought this is the buying climax, but in reality, what's actually going on is you have a real BC, AR, ST, right? UT, and then you have your breakdowns, right? There is Wyckoff that occurs within Wyckoff. There is type 2 schematics that occur within type 1 schematics, right? So if you use this overall area, you might have actually seen a potential BC, AR, ST, sign of weakness in phase B, right? Engineering more liquidity. This actually acts as a UT now, and now this acts as a UTAD, okay? And as you can see, there's a type 1 inside of a type 2. And that's how price can be delivered to you in a multitude of ways. This is why your mind has to constantly shift between higher time frame and lower time frame, supply and demand zones, and the creation of liquidity and the liquidation of that liquidity. And constantly aware of the fact that it can do a multitude of things, and as a result, managing your risk with that in mind. So with that understood, you'll see that throughout the week, there wasn't just these beautiful 2 sells that we were able to take and secured about, what is this? 56, 16, so that makes it about like about 72 RR, I think. 72 or 82? 72 or 82 RR right here. Now, that's not 80% secured on the trade. What you'll notice is this original trade had a partial around here of like 1 to 3, 1 to 2. This next trade had a partial at this low. Why? Because this overall bias could have became its own accumulation and done this. Now, if that occurred, we would have been able to be flexible about it, and we could fully adapt to the underlying price. But because of our overall bias, we had still anticipated price to run these lows, especially after this break of structure higher, and we wanted to see price return back into these areas before giving us higher prices, before giving us lower prices, right? Because price always has to buy to sell and sell to buy. Just like when we took these, we were anticipating this trade right here to already run up into these areas at 1 to 25. Instead, it ran 1 to 13. Now, what does that mean? Does that mean we made 14%? No, it doesn't. You can see, even even if we zoom in, you can see when we took this, and again, it was a lower time frame, the first partial was here. We had a partial at 1 to 1.17, a partial at 1 to 9, and a partial at locking in the high, so I locked in here, and a final partial at 1 to 15, right? So it wasn't 14%, it was more like 0.5 plus 2.5 plus about 3.5. So overall, it was about 4.5 or 5% on an overall trade. Similarly, if we get even lower, you can see inside here, we actually had another trade that ran only 1 to 2, right? We keep looking through this and you can see there are a multitude of trades, one that ran 3.5. And again, that might have been a partial. I think this was a partial, right? Because we were anticipating every one of these buys to potentially run to completely new highs inside of these supply zones here, or even inside of these supply zones here. Instead, price came lower, dipped down lower into these zones here, which were again, new demand zones formed by previous breaks and more accumulations, tapped into them, give you confirmation on much lower time frames, and made their run up against liquidity. So again, you always have to remember, where's liquidity being formulated? Where can liquidity be grabbed? How are we forming price? Where are we moving towards price? And most importantly, how are we using our confirmation of the 1, 2, 3, which is structure breaking down? If it is, which supply zones is it leaving behind? If it is, how do we look for confirmations inside of those overall supply zones, and how do we get involved in those, or how do we look for new confirmations within those new supply zones? So hopefully this video made a lot of sense to you guys. Thank you so much for watching, and I'll see you guys in the next video.